Hello and welcome to Morningstar. I'm Emma Wall and I'm joined today by Ollie Russ, manager of the Argonaut European Income Fund, to give his 3 stock picks. Hi Ollie.
Hi there.
So what's the first stock today?
First one is Swedbank. The Scandinavian banking story, I think, is relatively well known. They, particularly in Sweden, know how to do a banking crisis. They went through one in the early 90s. So when they hit this banking crisis, they knew exactly what to do, which was basically end their global ambitions. They shut their bank in the Ukraine, for the example, recapitalised the bank, sacked the management, cut the dividend to zero, basically started again. And that has been a very successful strategy. They did it very quickly. And now we see the bank very well capitalised. The Scandinavian banks are probably the best capitalised in Europe, so lots of capital there. Now paying a cash dividend of about 6% over the next year or so. What they are really are utility banks. They've made the psychological leap from we are a growth company to we are a utility. That means return of capital as well as return on capital. So what you have seen is a very good capital discipline, very strong cash dividends coming through. And really that's all they can do. They can't grow faster than Swedish GDP in the long run because they're already the biggest bank in Sweden. So really it's about returning money back to shareholders. Hopefully now they're in an excess capital position, we may see even further special dividends.
So is that 6% sustainable? Because that seems like an awful lot from a bank when you're sitting in the UK.
It is an awful lot, but it's not impossible. Banking is, done cautiously, a very profitable business. You think of Lloyds in the UK before it merged with HBOS, safe, conservative bank with a high yield. That's presumably where Lloyds will end up again one day. There are several banks on the continent that are in that position, maybe coming back from a cancelled dividend position, now growing that dividend back to where it should be, a bit like Lloyds, or Swedbank itself, which generates quite a bit of cash.
And what's the second stock today?
Second stock is a bit different, Drillisch. It's a virtual mobile network operator in Germany, exclusively Germany. The advantage of this as a model is they don't own their own networks. They actually rent or buy space from the existing networks. What Drillisch has done very successfully is it's gone after the sort of prepay customers, the sort of lower end of the market, that the big brands don't really want to almost bother their brands with, because if they start giving very cheap discounts at the bottom end with their own brand, sooner or later the top end clients want to move in that pricing direction. So they're quite happy to outsource this to MVNOs like Drillisch. Now they've just moved into a new strategy now where they've bought a considerable part of spectrum from one of the major operators in Germany. They now have to fill that up. So that's a bit of a change, a bit of a risk. That's a fixed cost. But they could double their subscribers over the next couple of years. And if they do that, then they will start to put out really significant dividends.
I mean, you've hinted at it there, but there's been a lot of consolidation in this market. A lot of people are suggesting that Europe will move towards the 3 to 4 player model as they have in the US. How will that affect this stock?
Well, it's already got a large alternative player in the market that has taken a big stake in them. So presumably at some stage that stake could well go up, actually. So you're absolutely right. Consolidation in this market is ongoing, and we've seen a lot of it already, and undoubtedly there will be more in the future.
And what's the third and final stock?
Third one is Amadeus Fire, which we don't own in our main income fund, but we do own in our enhanced income fund. It's a little bit small for the main fund. It's German again. It's a recruitment consultant, effectively, or a provider of employment services. Basically, it provides temporary accounting staff or finance staff generally in Germany. So when BMW have a special project that needs 10 accountants starting on the Monday morning, Amadeus Fire is a #1 in the marketplace. They'd be the first people to call. Very niche business, quite fragmented, but they are the best at it. They've got a net cash position and they basically pay out all their earnings to shareholders because they have no further use for the money.
Presumably they're very tied into the recovery story because you're talking about special projects there, which is not something that corporates take on when they're under fire. Germany obviously is under strain at the moment because of what's going on in China with the revenue links there. Are you worried about that element? I mean, will this company be hurt should the German economy falter?
It's much less cyclical than your typical recruitment agency, which is more blue collar. That is highly cyclical and much lower margin. This is much higher margin, and actually through the last credit crunch or crisis, it actually continued to do quite well. So we're not too worried about the cyclicality. In uncertain times, a lot of companies do move more to temporary contracts. So they might make more use of people like Amadeus Fire than less. So it hasn't hitherto been a problem, but obviously it's something to watch.
Ollie, thank you very much.
Thank you.
This is Emma Wall for Morningstar. Thank you for watching.